Greetings, members one and all of the Salivation Nation. The gold to silver ratio is at record highs again. And how much longer can this go on? We're going to kind of explore that and take a look at some of the things that are happening in the markets right now that can maybe help explain what's going to happen with the gold to silver ratio. These come to us from Kitco, and it says that the gold-silver ratio tested 89 recently, which is the highest level since 1993, as silver still fails to show signs of life. But this may be a good opportunity to buy the metal, said Bill Baruch, president of Blue Line Futures. Spot silver closed at $14.41 an ounce on Wednesday. It's up a little bit now. We'll talk about that in a moment, too. But it's an eyelash away, basically, given some of the moves we've seen over the last year, but be ready to buy down there. There's a couple of ways to look at it, and right now, if it doesn't get to $14, it's a nice way to get some exposure to look at selling $14 puts. Basically, he's saying that, that he believes that probably $14 is that bottom. Investors should look for the bottom to form, and it'll be a strong floor, basically. It's not so much as it is a process. $14 an ounce is also significant as a potential floor for silver because that level is close to the cost of production for many silver miners, and that's the thing we talked about in this in a prior video. That's primary silver miners. There's a lot more flexibility with silver as a byproduct of other metals, which is where most of the production comes from, or at least it will come from. And then how that meets with demand is another factor. So we'll see. So I believe there's still more room to move. Now, if more primary silver miners go offline because they're not able to meet the targets, number one, I think they'll find some ways to become more efficient to bring that cost down because, as we'll see in the next story here, it's all about the price of other commodities too. And silver moves as a commodity in price just as much, if not more so. Well, I think more so, given the gold to silver ratio where it is right now. And so he's saying that should silver see its price swing upward from the bottom, investors should be prepared for gold to move higher as well, Baruch said. And we'll see examples of that here momentarily. I like gold just a little bit more right now because it's been more constructive this year and for the landscape of the global macro side as well. He said gold has a lot of support down at $1,255 an ounce. And Baruch maintains that his $1,400 an ounce gold price projection and said that the main thing that is currently holding gold from realizing that level is the Chinese yuan, which also could play a role in why silver prices are low as well. Now, the renminbi has been struggling because China's economy is not doing as hot as some people think. And, it's a weaker economy than many people think. And that's why I think that Trump is being so bold with the trade negotiations because he knows this. And the renminbi's performance here is another example of this. We have the upper edge there in that case. The yuan has weakened over the past 2 weeks, really the month of May, 2.5%, and that's really hurt gold. And not only that, but you're getting a failure at $1,300, and a lot of those bad memories from people that were trying to buy gold on the dip last year. And they're not going to get in front of a trade war right now with gold. Now, as of the recording of this video, it's just after midday here. Gold prices are popping now on safe haven demand. And silver prices are too. We'll take a look at that momentarily. Gold prices are posting good gains and are at near their session highs at midday U.S. trading Thursday. Slumping world stock markets and crude oil prices today have put a safe haven bid on the gold and silver markets. June gold futures were last up $11.10 an ounce at $1,285.20. July COMEX silver prices were up 16 cents at $14.61.5 an ounce. World stock markets were mostly down overnight. U.S. stock indexes are sharply lower at midday. Risk aversion has again surfaced late this week. Renewed worries about a prolonged U.S.-China trade war following new harsh rhetoric coming out of China are featured today. However, traders and investors are also eyeing parliamentary elections in the UK and the Netherlands that got underway Thursday, and the populist party's Eurosceptics possibly doing well. Other European countries' election results will be announced Sunday. The UK Brexit issue that remains unresolved amid Prime Minister Theresa May's planned departure continues to weigh on the British pound. A big drop in oil prices of around $5 a barrel the last 2 days have also helped boost the safe haven metals, even though weaker oil prices generally would be considered bearish outside market forces for the metals. The U.S. dollar index hit a 2-year high early today, but then backed off on some profit taking. The U.S.'s more aggressive stance against Iran in recent weeks is another matter that could quickly elevate trader and investor tensions. A U.S. naval task force is in the Persian Gulf region. Here you can see 24-hour gold and 24-hour silver. Look at the similarities between the two metals. This actually, of the uptick, at least in the price, they're moving pretty much together, and it's interesting to see that movement, because I think that's a sign that maybe we are getting closer to the bottom of silver prices. And you think about all the factors that come into play, that where silver is measured as that commodity, with oil dropping, it kind of makes sense in some way, because the cost of production and everything like that, which means that these primary silver mines, if oil continues to drop and fuel costs that are involved from oil, they may decrease as well, which means there's a little bit more room to move to profit with silver. It's very tough to really get a hard number. Of course, each mine has its own particularities with regards to what the performance of the precious metals or the mining, and what it takes to mine out silver and gold, for that matter. You take a look at the video I did earlier on the Mexican mines. The second largest Mexican mine has been suspended operations. You look at the numbers, it takes a lot more energy to produce at that mine than it does on yet a different mine. So that brings us to the gold to silver ratio. Right now, it is down a bit, 0.26%, at 87.82 to 1, and still very, very high. And I don't believe we're going to see that ratio tighten up much more, down the line, at least for quite a while. I think it's going to take a bit, and I don't think we'll ever get it to the point where it was the natural ratio, obviously, or the historic ratio, the set ratio of 15 to 1. I believe we'd be lucky to see 50 to 1, really. But look at these numbers here with a movement. Gold is at 0.82%, and silver is at 1.05% upwards trend, which is, to me, that tells us that, silver obviously has more room to move up, but it's also a more volatile metal. It's performing kind of as it has been, especially in this new age with technology and the like that's going on. And there's so many different factors that come into play with that. But its role as a commodity really makes silver the more volatile of the two metals. But this strong floor at $14, and I thought that floor would have been $15. But obviously, the lower silver goes, the closer you're going to get to its bottom. But I do think that's encouraging, because I think we've got to be very close to it, because you look back, where those resistance levels were, and you look back in history, we're not going to see $8 silver anymore. I think we could all safely say that's going to be the case. And it wasn't that long ago when it was $8 or $9 an ounce. I don't think we're going to see $10 silver. Some people think it's going to go down to $12. I highly doubt it, but I guess that is a possibility. But it looks like these analysts are thinking maybe $14. And when they say that, and they still are more excited about gold than silver, to me, it holds more, that argument holds a lot more weight than vice versa. It's going to be interesting to see. Here's the historic gold to silver ratio platforms that we see here looking from 31 days, 6 months. And you can see it's been kind of erratic over the last 10 years. It did get, when the highs of 2011, those prices were up. We did see it go down to 32.27 to 1, which in my view, that's still relatively high, but that's an extreme example. I think the average of this pulling out, is right around here. I think that's probably more realistic of a notion for the gold to silver ratio. Because gold and silver really are, in many ways, a lot different in many aspects, but they're both money. They're both ways to preserve your wealth. I encourage viewers to accumulate as part of your portfolio as a matter of stacking or preserving your wealth. And if you're a collector, well, that's a bonus, because this is all the silver you stack in your collectibles. Turns out it's going to have intrinsic value. That intrinsic value manifests itself as a preservation of wealth, even if you don't preserve any kind of collector or numismatic value on top of that. These metals, gold and silver, we hold them to be self-evident, and that's what we're going to do, and we will continue to press on. By the way, I'll make a quick mention of platinum and palladium here. Those metals are suffering under this because, why? Well, look at the fuel costs have gone down. I don't know if that has played some part with those two metals going down, but with the gold and silver going up. But I see platinum and palladium as fringe precious metals, with platinum barely on the edge, playing in the field of money and play as a preserver of wealth and as an investment vehicle. Volatile for sure. Historically, it's run higher than gold, but of course, in recent history, we've not seen anywhere near the performance that gold has, and the palladium typically should be less than gold. Well, actually, this has been all over the place too, but nonetheless, there it is. So post your thoughts below. Interesting news of the day. And what are your thoughts on the gold to silver ratio? I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.